Hi, my name is Chuck, and over the next few minutes, I want to share with you something of value that was shown to me. I respect your time, so let me get to it. Let me share my screen with you. This right here is a price chart. This is a price chart of a currency pair, the euro versus the US dollar. Now, if you ever travel to another country, you know that you go to another country, they have a different currency. Well, in the US, they have the US dollar. In Europe, they have the euro. Japan, they have the yen. Mexico, they have the peso. And what we do is we take our currency, US dollar or any currency, and we exchange it for the value of another currency. Now, if you were actually going to travel to Japan, you take that US dollar and you'd exchange it into Japanese yen at a conversion rate. But let's just pretend that while you were in Japan, the value of the yen increased. When you came back to the US, you exchanged your yen back into US dollar. You would essentially have more buying power with your yen than you had before. You'd be able to actually buy more US dollars. Well, that's not a very effective way of trading Forex. The way that we do it each and every day is we trade from our tablets, our phones, and our computers. And what we do is we look at these charts that for you right now may look a little confusing. It's going up, it's going down, it's moving aside. But I want to show you something because I believe that in a short period of time, you can get to the place where you can understand this market and you can begin to take advantage of it just the way the banks do. The banks are actually taking our money that we give them, that we work for, and they are trading it in the foreign exchange market. So what my buddy showed me was a way that I can actually take my money and put it to use, make it grow. Now, the foreign exchange market is the largest financial market in the world. This is a $5.3 trillion a day industry. We're talking about the largest liquid financial market in the world. And again, I told you, the banks are actually doing this. They're taking our money and they are trading it. We are looking at a chart right now. It looks kind of chaotic. Well, all we do is we either buy or we sell. Well, how do we know when to sell? We sell when price is hitting a ceiling. See this yellow line that I just drew up here? This big fat line right here. This is a time where price hit a ceiling. Right here, this is a time where price hit a ceiling. Right here, this is a time where price hit a ceiling. So for us, we would sell. Also, when we see price hit a floor, we will buy. So right here, we can see that price came down and it hit a floor and went up. It came down, hit a floor and went up, hit a floor and went up. So what we look for is we look for patterns in the market, and we look back at history to determine what may happen in the future. All right. This is not about guessing or gambling. This is a science and this is an art that you can learn how to do yourself. Again, we see a ceiling, we sell. We see a floor, we buy. All right. And the market moves on trends. This was what was called a downtrend. This was what was called an uptrend. And you're going to learn about this as your education continues. Now, one of the things I want to share with you is when we make that decision, we use what's called a lot size. We have a lot size here, 3 options. We have a micro, we have a mini, and we have a standard. This is our investment into the trade, okay? And one of the things that we focus on is proper risk management, because risk management and protecting your money is key. If you've ever heard anyone say, don't put your eggs all in one basket, that's exactly what I'm saying. There are trade opportunities that happen on a daily basis, on an hourly basis, on a minute by minute basis that are all available to you. So you don't have to put all of your account in jeopardy based upon one trade. So whenever you're taking a trade, you're going to want to risk 1 to 3% of your account size per trade, per investment opportunity. Now we have calculators that help us with that. Now people always ask, how do you really make the money? Well, there's something else that I need to explain. We don't measure how far price is moving by dollars or by euros. We measure that in pips, the same way you would measure distance in miles, the same way you would measure how much water is in a pan by cups. We have a unit of measurement called pips. And what we do is we make money by collecting more pips. For instance, if I saw this price hit the ceiling, and I say I'm going to sell, the further this thing drops, the more money I make, or the more pips I collect, okay? Now, we have what's called a stop loss to protect our money. All right. So let's say I'm wrong about my decision. Well, remember what I said, we're only going to risk 1 to 3% of our account. So we set a stop loss there to protect our money. All right. So if price decides to go in a different direction for a buy, meaning I think it's going to go up, then the sell, well, I can get what's called stopped out. I can get taken out of the trade and my money can be protected and preserved. I'll only risk what I already had determined before I took the trade, to risk 1%, 2%, or 3% of my account. We have calculators that help us with that. For instance, if I had a $200 account and I wanted to risk $1 on this, 1% on this trade, and my stop loss was 20 pips, I would calculate this out and it would tell me to use a micro, okay? And so in this case, a micro is 10 cents a pip. So as this thing journeyed down, there was a potential trade opportunity of 200 approximately pips. So I would take my 200 pips and I would multiply that by the lot size that I chose on the trade. And that's how I would make my money. I would have made approximately $20 on my $200 account. In other words, I would have risked 1% to make $20. What was risking 1%? $2. So I would have risked $2 to make $20. That's how you trade successfully, stacking the odds in your favor and dealing with risk. Now, you may be like, I don't know how to do this yet. Exactly. I didn't know how to do this either, but let me show you how I learned. Right here is something called IML Academy. IML Academy takes us through the basics and starts us from beginning of knowing nothing to get into the place where we become advanced and we can understand more complex trading strategies and techniques. So it starts you with knowing nothing and you work your way through. These are all on-demand videos that you can watch. Each video will have questions that will actually need to be answered by you so that you can really track your progress in your learning. Now, there's something else called iMarkets Live TV. Once you're finished with IML Academy, which is about 5 hours of the basics and what we recommend, then you're able to join us in iMarkets Live TV. iMarkets Live TV is live television where we have live instructors that are actually teaching us, and everybody has their times and you can pick and watch different classes. Okay, if you miss a class, you can always watch the replay. iMarkets Live TV is great because not only do you have teachers that are teaching you strategies, they're also looking at live trades. Live trades. So these are live investment opportunities, right? They're making money and then they're giving us their analysis on the trades that they're even thinking to take for themselves. So one of my favorites are to watch your Chance and Samantha. Every day they have the pairs that they're looking at in their class and they'll walk you through. This is what we're looking at. This is how we're expecting it to play out. And then they will come back in and they will give you a recap. Every teacher does their class differently, but you'll find your favorites, all right? And we start with basics and you can move into more advanced classes. One of the things I want you to note, we have crypto education. So I've only spoken to you at this point about foreign exchange market, but we have crypto education. If you're interested in learning about crypto education, then you want to dig in here. This is where you're gonna learn about cryptocurrency, digital currency, and what's happening with that. You may be familiar with Bitcoin and all those different things. So not only do we have education, we have tools. And one of the tools that we have, and one of my favorite tools, is called the Web Analyzer. Now, this is helping me. The Web Analyzer is like an assistant that is scouting the market and actually looking for trade opportunities. This is the Web Analyzer. And what it does is it comes out with trade opportunities. Now, I pulled up one earlier just to save time. This was the Great Britain versus the NZD dollar. And what happened is they gave us an alert that said there's a trade or investment opportunity right here where these green lines intersect. Marked it out so that we could see it. We would put our stop loss here in case it goes in the wrong direction instead of buying. If it decides to sell, we're only going to risk 1 to 3% of our account. Now, if I would have taken this trade, I would have potentially lost 35 pips or potentially gained 172 pips maximum so far. This call happened on December 27, 2018, and it happened a little bit after midnight. This was an opportunity for us to take a trade. Now what I did is I pulled up a few other things that I want to share with you. This was the Euro-Japanese yen trade. This was called on December 28th, 2018, at about 2:30. And here again, we had another opportunity for a sell. Remember, we can make money in both directions. We could buy, making money because we think price is going up. We can sell, making money because we think price is going down. And so in this case, there was a sell opportunity that was called out by the web analyzer. It was analyzing the market and giving us trade tips. Right here, it gave us some information that there was an opportunity here to sell on the euro versus Japanese yen. Stop loss would have been about 30 pips, and my potential gain would have been about 64. One more thing I want to show you is the harmonic scanner. This is another tool that we're given to help us understand the market. Now you can see right here on the harmonic scanner, there was a call here for a sell. This harmonic scanner told us where we could potentially get in, right here. It told us where our target could be, right here, or our target could be here or here. This choice you make yourself. You determine where you want to go. You're in control of your money. You're making the decisions yourself. They are just giving us assistance and education. So this scanner scanned for a reversal pattern called a harmonic pattern. And then it gave us the opportunity to either make 12 pips, 19 pips, or 32 pips. In this case, this thing hit the 32 pip target. Okay, let's check this one out. Over here, we can see euro versus the Great Britain pound, that there was a trade opportunity that came in on December 24th. It gave us the heads up and we were able to take advantage of it. There was a potential gain here that we see of either 36 pips, 58 pips, or 95 pips. Remember, we're taking it from here, our entry area, and we're taking it to take profit 1 to 2 or 3. And I don't have to actually sit and watch this. The beautiful thing is that I can go on my phone and I can put in these prices right here. And when it gets there, it can take me out of the trade automatically. So I don't have to babysit my trade. Let me show you one more thing. This was an opportunity on December 26th at 2 p.m. Harmonic Scanner gave us another trade opportunity. This was on the euro versus the NZD dollar, or the New Zealand dollar. And again, there was another opportunity. I could have gotten a trade around here and took it to take profit 1, 2, or 3. Now this one went even further, so there was even more money to be made. But it did give us the first 3 targets. And if I would have taken it to take profit 1, 40 pips, 65 pips, 105. Now if I was trading a micro, that would have been a $4 gain. On a micro, a $6.50 gain. On a micro, a $10.50 gain. Now remember, we made this example with a $200 account. If you gain $4 on a $200 account, you have now gained 2%. $6, right? You have now gained 3%. And $10, you have now gained 5%. I want you to see this last thing, because this is the power of what we do in the foreign exchange market. Let me share my screen one last time. And what you want to do is you want to understand the difference between compound interest and simple interest. Now, I just gave you 5 different trade opportunities, but let's just focus on this one right here. This one right here had a gain of 172 pips, okay? If I would have taken this trade on a $200 account, and I would have risked, let's say, 2% of my account. I come over here, Great Britain NZD, I change it to the pair that I'm looking at, and I calculate. It tells me that I could use what would be 3 micros, 0.03. You're gonna learn how to read lot sizes when you begin to educate yourself. What this says is for every pip, I'm going to gain 30 cents or lose 30 cents. Now, in this case, I would have made 172 pips. So what we would do is we'd take 172 and we'd multiply that by 30 cents. That would be $51.60. $51.60 divided by our account size of $200, and you multiply that by 100, you now have 25% growth. What I want to show you is how compound interest works. If I had a $200 account and I was able to get 25% growth, and let's just say I was able to only do this once a month, one time a month, I was able to get 25%, or all the trades I received got me 25%. I did this once a month, what would happen is I could potentially see growth in that year period. Here, I could take an account to $2,900. This is how compound interest works. That first month, 50 bucks. The next month, 62 bucks. Because what are we doing? We're reinvesting our money. We're letting our money work for itself. So instead of making 25% of $250, I'm making 25% now of $250, now of $312, now of $390. Now, past profits don't guarantee future profits. This is a hypothetical situation based upon a trade opportunity that came up. You're not always going to get 25% growth, right? You may get more, you may get less, you may get that. But this is just the power of compound interest. Let's just say once a month you were able to get 10%. Now, what I showed you was a trade that would have did it in a day. But let's say you're busy, let's just aim low. You could potentially get 10%. On 10%, you could take a $600 account in a year, one time a month, 10% a month, and it would be $627. If you was to keep this up for 2 years, you could take an account to $1,900. Now watch this. If you are able to do this for 4 years, this is the power of compound interest. $19,000. And then if I went ahead and did this for 5 years, $60,000. You can quickly see how things can progress from here. Now again, I'm not making any income guarantees. Trading is going to be about your effort and your ability to apply the information, the education that you're being given. What I will say is that every day, this harmonic scanner or this web analyzer tool gives out opportunities to make money. And all we have to do is know how to take advantage of those. The way that starts is by educating yourself first in IML Academy. Next, in iMarkets Live TV, and learning from the educators and utilizing that education on the actual products that are available. Now, hopefully this helps you. I've only shown you a piece of what iMarkets Live has to offer. Because of time, I don't want to go any further. But if you have any more questions and you want to know exactly what IML can do to help you achieve success in the foreign exchange market, get back with whoever showed you this video. Again, my name is Chuck Jones, and hopefully I've given you some value.